Hey, what's up, you guys? Welcome back. In today's video, I'm going to go over Ethereum Classic. Right now, we are trading at $28.70. 24-hour volume, we are down 25%, and market cap, we are down 0.73%. So heading over to our chart here, I'm going to go over a week, our day, and 1 hour for immediate short term. But if we can take a look on our weekly time frame, I do want to show you we have been making a lot of higher low peaks dated all the way back from November 8th, and then over here on March 21st. August 8th, and then just recently here on September 5th and September 12th. So as these peaks are getting smaller, we do ultimately get the feeling and the hint that the buyers are not pushing the price as high as they want to or can essentially. So as we are progressing here, we can ultimately come down to $25.16. The reason why here is that we see our RSI from compared to last week has actually generated a selling opportunity. So if we can see here, the white line is below our pink line, and when it crosses over, it's going to generate a opportunity here. In our case, a selling opportunity because we are considered to be oversold. Now, as we can see, we are close to an area of point of interest, meaning our 78% of our fib, where we can see a lot of our candlesticks here retracing down to this area as a level of support. But not only that, is we are closer to our 20 moving average, which is this orange line that could change this bullish trend down to a bear trend. So it could ultimately change the reversal or the trend itself. Now, what we can see here is ultimately a double top chart pattern. So we can see a M forming here, coming down to an area of support, another resistance area, and then another support. Now we need to see if we have confirmed at least 5% from this neckline, which we are going to be measuring, and take a look of this. So here's our neckline. So here it is already. We have confirmed at least 12% of the neckline of this double top chart pattern. So essentially where price may want to go again is this area of support, this tested support at 78% of our fib at $25.16. If we take a look at areas of supply and demand here, I'm going to zoom in just a little bit more. We can see that there isn't really a whole lot where price is wanting to lead to because all of the activity was from $42 and then $32. So that $10 gap above here. If price is going to come back down, here is a node that we can ultimately treat as a good support of $24.02. Again, already on the left-hand side, we can see a lot of our candlestick wicks have retraced down to this level. We're essentially retesting our support of 78% or $25.16. As we can see, the MACD indicator at the very bottom here is getting closer together. Spaces in between are very little to none, which may actually flick from the green into the red at an area of support. We may actually break that. So going into our daily chart here, you guys, daily chart here with the time zone here that we have finished off last candlestick in a spinning top candlestick, and the close was essentially below this body's close. So what that means is that it's giving us subtle hints this uptrend is soon over. And what we can see too is considerably to be overbought here. So we can see that our RSI is at 89% and 75% above 80% is considered to be overbought, and price is going to come back down. Along with our spinning top candlestick, we are going to retrace downwards. Depending on how strong the momentum is, of course, we may see the area of support here at $27.09 here. Now, if I do zoom out, again, there isn't really a whole lot of opportunity for an area of support. As we can see, we are kind of in the middle end of things, but we can see this node here that is sticking out from our volume profile off to the side here of $28.09. Now that's only given that our MACD indicator does flick from the red to the green at this area of support, and we'd be able to bounce from it very, very nicely. But be careful, as price may want to retrace down to the next fibbed retracement, which is $27.09. And lastly, guys, 1 hour time frame. All right, so the last previous candlestick that we saw, or two candlesticks again, what we saw is a spinning top candlestick in the green, but essentially very, very cautious here. It was seen around the 50 moving average. Of course, in the last candlestick as well, we have gorgeously closed above this candlestick here. However, it created another gap. So the gaps that we see is essentially left liquidity that needs to be filled later on. So we can see here was a gap from this previous candlestick. It was filled in the next or a few candlesticks after. Here again is a gap that was left from the previous candlestick. It was filled in this essential area. So be very cautious. I feel like price is going to come back down, hit 61% as a resistance line, as price is going to retest this area and see price kind of consolidate sideways, as the MACD indicator does show us that we've got some red bars in here. So depending on how strong the momentum of these red bars itself, we may hit resistance at the $28.36 here, or sorry, $28.73, as the price again is considered to be oversold and a buying opportunity may present itself, but the momentum itself is showing us red. So we typically see a lot of consolidations in these two factors alone. But as the price is coming up, again, we do essentially just want to hold our 50 moving average to continue to retrace higher resistance lines. So that is my video here for Ethereum Classic. Thank you so much for watching. Like, subscribe down below, but I'll see you next time. Bye.